In this video, I want to share with you 5 ways to recover financially from losing everything in the stock market. I'm making this video because anecdotally, many of my friends, both personal friends and internet friends, took catastrophic losses in the market crash of 2022, and many of them, quite frankly, have given up or are close to giving up, which in my opinion is a travesty, because the stock market is a tremendous wealth generating tool. So let me share these five methods, and this is not investment advice. This is just speaking from my 27 years investing in the stock market and recovering myself from a couple big blow-ups that I had, one in the year 2000 and another one in 2008. Number one, the first thing you need to do is you got to feed the beast. The beast being your account. Now, I think one mistake that many people do is they start with a lump sum, 1 grand, 5 grand, 10 grand, 50 grand, and they say, this is my investment money, and if I lose it, then I'm out, I'm gone. Instead, what you need to do is direct deposit money into your investment account every month. The amount is immaterial, $100, $500, $1,000, and then you will find that over the years you're going to improve as an investor, and you're going to be able to grow that money as it arrives incrementally. And when you have money coming into your account judiciously, you're going to be more precise and calculated about how to spend that money. If you have $500 a month coming into your account, you're going to be a lot more careful with that $500 than if you start with 10 grand that your Uncle Leon gave you. All right, number 2, what did Einstein say? The definition of insanity is doing the same thing over and over. If you completely blew up your account in 2022, chances are you were doing the same handful of things, mistakes, over and over. So you need to look at your trading record from 2022 or whenever you lost all this money. Maybe it's been this year, and go over every trade and figure out what you're doing wrong. I suspect almost all of it has to do with risk management, or simply being in the market at the wrong time. When the market's going up, guess what? Almost every stock's going up. When the market's going down, guess what? Almost every stock is going down, and it doesn't matter how great of a trader you are, doesn't matter how perfect the price patterns are that you're buying from. If the market's going down, guess what? You're going to lose money. Which moves me to, what is this? My third point, progressive exposure. So what you do is you move into the market progressively. There's 2 subsections of this. One, I think the amateurs most of the time buy all their shares at once. They have 1 grand to spend or 10 grand to spend, and they spend it all on a single buy order. Instead, act like a fund manager and move into these things incrementally. Buy a half position, and then if the trade starts to work and it sets up again, then add the other half. Or buy half, then if the general market turns down and your stock comes in because of the general market, and then it bounces off of the breakout point, then you add the other half on the pivot point, on the bounce off of the pivot point, etc. Move into your buys incrementally. And that way, if you're wrong, guess what? You only take a loss on half of the shares, or a third of the shares, or a fourth of the shares. By the way, this often is a good technique for getting out of a stock too. Selling half or a third or a quarter at a time instead of panic selling the whole darn thing, unless the wheels are falling off. So the other part of progressive exposure is your position size. Let's say you're completely in cash. I know Mark Minervini, for example, right now, August 13th, 2023, he is completely in cash, and he's just watching stock's price movement. When he decides that things are moving well again, then he's going to tiptoe in. He's going to open one little pilot position. For him, that's probably like, I don't know, 50 grand or something. But, for us, it might be $1,000 position. It might be a $500 position. It might be one share. You open up a pilot position, see what happens. If that works, you open up a couple more pilot positions. If those start to work, and by work, I mean they're up 10%, either on paper or you cash them out for 10%, then you progressively increase the size of your positions until when you get into one of those months when the market is running red hot, you are fully invested. And if you are an experienced investor, you're on margin. And then you back off quickly when things cool down again. That's how the professionals do it, rather than, I think beginners, they always buy $1,000 worth of stock, or they always buy 10 shares or 100 shares or 1,000 shares. Instead, progressively modify the size of your investments and your overall percentage of investment based upon not just market conditions, but how your personal account is doing. It doesn't matter what the general market is doing. It matters what your account is doing, right? All right, let's see. What are we on? 4? 4, if you lost all of your money, then to be blunt, you're not practicing risk management. So here are some aspects to risk management. Number 1, buying at proper buy points, which is beyond the scope of this video. You can check out some of my technical analysis videos if you're interested in that. But basically, not letting fear of missing out overwhelm your rationality and buying stocks that have run up, that are overextended. Secondly, use sell stops. Set a hard stop via your broker, or set an alert, or if you can watch the market every minute, and be faithful to these stops. Don't move your stop as it goes down. Don't say, well, I'm an investor, not a trader. This is an investment now. Mark Ritchie says that you can make a stock going up into an investment, but you never make a stock going down into an investment. So set sell stops. I recommend, once you get good at proper entry points, I recommend an average of about 5%. As a beginner, you can get away, especially if they're small positions, you can set your sell stops at 10%. And don't average down. I can't tell you how many people say that averaging down is a good idea. Why would you buy more of something that's going down in value? Mark Minervini, 2-time U.S. investing champion, has said over and over again that losers average losers. Yeah, you can be really smart and blow up your account if you do this. Look at Cathie Wood. She averaged down for millions and millions of shares in many stocks in 2022, and she absolutely blew up her account. Thinks she lost like 90% of her investors' money. And white people haven't lost faith in her. I don't know. I think results are what's important, not how eloquent of a speaker you are, and not your pedigree, so to speak. Then I think this is 5, right? 5, figure out the type of investor you want to be. And so 5 is study, okay? But you don't just buy a handful of random investing books and read them. No, figure out the type of investor you want to be, and then learn everything there is about that style. For me, that's swing trading. That's why I've studied Mark Minervini. But maybe you want to be a position trader. Then you study David Ryan. Maybe you want to be trade options. Maybe you want to be a day trader. Day traders, by the way, almost always end up losing all their money. Figure out one style. Maybe you want to be a value investor. Figure out investments that are way undervalued and buy them and wait for them to be discovered. Regardless of the style, there are pros and cons to every style, and no style works all of the time. But pick a style that fits your personality and risk comfort and learn all there is to learn about it. And here's a bonus strategy. Number 6, believe. You got to believe in yourself. You've got to believe that you can do it. And you know what? You can. Let me know your thoughts and comments about this video, and if you want to share a hard luck story about your big losses, that might be cathartic for all of us. Misery loves company, as you know. And if you're interested, you can check out my Patreon. I do technical analysis of my portfolio and focus list every weekend. The link is in the description. All right, take care, everybody.